When we're running deals, we're raising money, we have a checklist. Here is when the legal documents are due. Here's the process for verifying yourself if you're an accredited investor. Here's like a 3-step process. This is when this video has to be out. This is when then piece of content has to be out. All of these are checklists. And these are ever evolving, ever improving checklists. Because if you don't have them, it's not going to work. But the flip side to this also is that you can have all the checklists in the world, but if you don't have the right people or if you have the wrong people who keep taking shortcuts on your checklists, the checklist is no substitute for having people who want to go do their job without taking shortcuts. Right? So we have all these checklists, but the bigger thing is we hopefully have the right people, and we're always improving on that process to keep bringing on the right people who will not take shortcuts when they're doing their job.
This is the Real Estate Vibe Show. I'm your host, Vinky Loomba, commercial real estate investor. And today I have a very special guest, my good friend, Omar Khan with me. Hi, Omar. How are you?
Hi, Vinky. How are you? And, pre-chat, we found out we have many more similarities than we thought and many shared experiences. So I'm very excited to be here.
Welcome to the show. I'm really excited to have you as well. A little bit about Omar. Omar is a CFA charter holder with 10 years of experience investing across real estate and commodities. He has successfully syndicated large multi-million-dollar deals across the U.S., advised high net worth individuals and entrepreneurs on real estate portfolio allocations, and managed $3.7 billion in capital financing and M&A transactions. On top of this, Omar is a true global citizen, having lived in Dubai, Toronto, Calgary, and now in Dallas. And I'm looking forward to meet you there soon. Today we'll discuss due diligence and asset management. Welcome again. So let's start briefly with your background. So if you can share with me who you are today and how did you become who you are?
So look, I'll start with the how. My family is a business family. They own lots of real estate, a couple of other operating businesses. So growing up, I was in an environment which was very not directly encouraging, but somewhat encouraging of being an entrepreneur, finding your own path and success and all of that, and just being exposed to many opportunities. So I think that I was very blessed and privileged that way. And who I am is basically that family connection was there. I worked in investment banking and finance and portfolio management, a bunch of things. But I always had the bug to go out and do things on my own. I was very lucky to be surrounded by excellent mentors and people who opened a lot of doors for me. And here I am after, a little while running a company, having so many of these great experiences, and then just really picking and honing in on our niche, which is really looking at real estate assets, being very operationally focused and trying to extract every last penny out of these assets before we sell it to the next person who can then hopefully rinse and repeat.
So let me ask you this question. How did you start in real estate? I know you're a finance guy, but...
Okay. Look, essentially, the finance thing was one because that's operational know-how, and I was involved in operations. So there was an operational component, the family component I've talked about. But the big reason for me was that when I got married, my wife's a physician. I was making good money. Thankfully, she was making good money. But every time we'd see our salaries, because we were salaried individuals, we would see that gross-wise, we'd be making really good money. Net-wise, it was kind of a different story, right? Gross-wise, you think you're making a lot. Net-wise, you're like, not too much, right? And that in-between component of taxes, that was eating us up alive. And again, while we're very lucky that at a young age, we were in good careers, we realized that even if you just continued on this path, just do the corporate thing, just, slowly keep going up, hopefully, this tax problem was going to become a big problem. Again, luckily for me, because my family is a business family, and professionally, I had that experiences. So I was exposed to ideas, right? And exposed to doing things a certain way. So I knew, okay, this is not just a given, right? You just don't have to do this. You can be in certain businesses, get certain tax write-offs. And that led me to basically real estate. And because of the tax write-offs, the tax efficiencies and all of that stuff.
So let me ask you this question. You've been doing this for 10 years. So what is your real estate investing thesis or strategy now?
My real estate investing thesis and strategy has always been the same. It's not now, because a lot of times people say, hey, what's different now? Nothing's different. If you just focus, say, on 2 or 3 core markets, right? For us at least, right? We focus on 2 or 3 core markets. We have a little sandbox. The sandbox is we need to have an opportunistic deal. How's that opportunistic deal described? Ideally, it is a management play. So we have to put less money and use our brains more, because that's the best way. You put less money, you make more money, right? Infinite returns. Otherwise, there has to be a component typically of deferred maintenance, right? You come in, you add some money, take care of all the loose ends, put in proper management, put in the right type of financing, because we're capital markets people as well. And that package allows us to get target mid-teens IRR on a sustainable basis. So opportunistic in 2 or 3 markets in a little sandbox, which is value add, but distressed as well.
Okay, so let's talk about due diligence.
Yeah.
Because every property you buy, you do some operational due diligence.
Hopefully more than some.
Or maybe multifaceted, So I wanted to understand from you, in your terms, what exactly due diligence is and why is it important?
Okay, so the important part, we're going to get to the important, we're going to talk about importance first and then lay out all the stuff here. Look, important is because due diligence is a very painstaking process. But it's better to take the pain up front than to lose a lot of money later on, right? So why is it important? Because if you don't do that, you just don't know what you're getting into, right? This is a problem I see frequently with a lot of finance people, lots of engineers, that they feel that if they have a spreadsheet, they're very good analytically, that if that spreadsheet or whatever, their analysis on a piece of paper says something, that must be a reflection of reality. And that's not always the case, because the spreadsheet is a complement to the real world, but it cannot accurately always describe the real world, because otherwise people would only use spreadsheets and everybody who's good in Excel would be rich, right? But that's not always the case. So that's why due diligence is important. Now, how do you do due diligence? Before you even get to, say, buying a property and we're going to get through all the details. The biggest thing is knowing and understanding your market. So as an example, how do you get to know and understand your market? You just have to financially, number one, if you are, say, from my background, capital markets financially, you just have to underwrite a ton of deals. There's just no other way around it. What do you do when you underwrite a ton of deals? A lot of this is muscle memory. Number one, you will understand and you have to work closely with, say, your property managers and people on the ground. You'll understand what type of expense structure kind of works on certain vintage of properties, right? Because you'll have, say, slightly more expenses on a per unit, say, on a slightly smaller property, because you can't amortize a lot of your expenses because certain expenses are fixed. Concurrently, for instance, utility costs might be higher on, say, older vintage properties versus newer vintage properties. Part of that is because you can bill back. Part of this is leakages, all of that sort of stuff. So you just have to underwrite a lot just to kind of get, muscle memory of like, oh, X type of vintage and Y type of markets, this is kind of what I'm targeting, number one, right? Number two, what you also have to understand is what type of revenue streams are out there. Because a lot of times we look at other people, say, for instance, we're buying assets from and see, okay, what are the things that they're really doing well? Because what we don't want to do is come in and just do what we do and never learn from other people, right? So again, when you go through these financials, you audit them, you completely understand, okay, what are the good players in the market doing? What are the things, when do they do those things, and how can you bring them into your toolkit, right? So this is just process and data management, right? Now, if you're, say, coming from a non-financial background, say you're coming from a property management background, leasing background, construction and maintenance background, you also have a leg up. Because, for instance, now I have construction managers and stuff, but I have to rely on third-party people to basically understand what type of budgets am I creating capital expenditure-wise, right? But say if you're a construction manager, you've spent 5-10 years just doing Class B properties, you kind of have an idea. Okay, again, high level wise, we're going to do interiors, but maybe the pipes break, maybe this happens, maybe that happens. If you have a 70s vintage properties in certain submarkets, there is a higher probability of water damage there, as an example. So these are just things you learn. And this is just pre-knowledge. Now, when you get to the property, there's a whole bunch of other stuff you need to do, because you've only got 30 to 60 days to close on a property, and your systems and processes and people need to be dialed in.
Wow, that's a lot of information. So let's break it down a little bit further.
Yeah.
So let's talk about the due diligence process. What does it look like? At what point you do the due diligence?
So now we're talking about the due diligence, like we put a deal under contract and now we've got to go through that.
Exactly.
So high level wise, before you put a deal under contract, I'm assuming most people have toured the asset And not just with the broker, they've kind of done some secret shopping around it, right? They've maybe gone to it at night, maybe some other time, kind of get a feel for the look and feel of the property, right? Because when you get a look and feel of the property, you understand, okay, trashes aren't being picked up. Maybe the siding is bad. So, okay, you gotta pick up all of those things. So if you've toured the properties a few times, you have an idea. Number two, now you put the property under contract, you need to have a really good property management experience team because there's a bunch of audits you have to do. Number one is a financial audit. So anyone can give you a P&L. Any owner can give you a P&L, but you don't know if that's true or not. I mean, how do you know it, right? So how do you know somebody's not making up the numbers? So how do you complement that P&L is, for instance, you will do a lease audit at a very simple level. What does a lease audit say? You'll open up your rent roll. You'll see, okay, XYZ people in ABC apartments pay me 1, 2, 3 money, right? Now you'll complement that with your bank statements, with receipts, all of that, just to build up that financials to see, okay, is the revenue coming in or is somebody lying to me? And again, you don't always get a 1-for-1, but as long as you're within 99, 98%, you're in the right direction, right? Then with bills, as an example, utility bills are a big example. A lot of times owners might pay a portion or all of the utility bill with another account and tell you, oh, I'm paying less utility bills, right? Because that's going to affect your valuation. So you have to make sure, as an example, that you see the actual utility bill from the municipality, as to give you an example, and compare it with what the owner is telling you that they're paying. And so on and so forth, right? You talk to the leasing agents, you talk to the property managers, you interview them, you find out, okay, what's happening. Then when you are on site with your team, you are physically walking every single unit. Anytime somebody tells you just look at a sample of units, they are straight up lying to you. There is something they're trying to hide and they just don't want you to see. So you always, no matter how bad or good or bad the property is, you always have to walk all the units. And again, when we're walking the units, we have software. So one of the softwares is Smartsheets. It's kind of like Excel, but it's a slightly more powerful version of Excel, right? Sort of like Asana and Excel combination. So we've already loaded up our template, right? So we give it to our teams. So every unit they go to, number one, they're taking pictures and it's uploading to that unit, right? So you see if there's some disrepair or if there's something happening, it's linked to it. We have a punch out list of sorts, or punch in, punch out list, where you go, okay, faucets, kitchen, living room, all of this. You have to check it out one by one and say, okay, what is the condition? What's my opinion of it? And complement that with a picture. So as an example, if there is a leaky faucet, so we're on Smartsheets where it says faucets, you say, okay, whatever condition it's in, plus you take a picture with your phone and it just attaches it to that. So now you kind of know what to do. Now, what it's also going to do is it aggregates all of this data automatically at the top. So you don't then have to aggregate it yourself, right? And then you have to have your teams with you to basically scope out all the utility lines. You have to make sure all your construction managers are with you so you can see on the exterior, what do you have to do? If you have a specific business plan, as an example, you want to put a dog park somewhere, right? Not just saying I want to put a dog park doesn't do anything. When you're there at the property, you kind of have to figure out, okay, where am I going to put the dog park? Is there enough space? And if there's enough space, how much will it cost for me to cover this dog park or a playground or whatever it is? So as you can see, there's a bunch of these things. And if you are not involved intimately in the process, I mean, you physically don't have to do everything, but you have to be there as a manager. If you're not intimately involved, the problem becomes if you miss, say, mold or if you miss water damage, right? Typically, water damage is not going to be just in one unit, right? It's going to be up, down, left, right. Mm-hmm. So now that little thing you overlooked, that can be like a couple of $100,000.
Yeah,
right?
Exactly.
So you have to be really diligent. And the thing is, when you're really diligent up front, you know what you're getting into. And because you know what you're getting into, these are controllable variables that then you have some ability to control. Because you've either allocated funds for it, you've talked to your lender, you have an idea, you plan for these things.
That's true. So what I'm hearing is due diligence is not just walking the properties only. There's like different types of due diligence. Like you talk about the operational, I heard you talking about financial as well. Is there any other types of due diligence that you can?
Well, high level, it's operational and financial, right? But what you just have to do is essentially what you're trying to figure out, Minky, for the lack of a better word, is what this person telling me matching what's happening in reality, right? If that's the case, good. Because every single broker, every single seller on the planet will tell you, oh, there's no problem. It's a great asset. But, we suck. So when you come in, you can do value add and increase rents by $600, right? And a lot of times that's not really the case. right? And part of, by the way, this entire value add process also is that you're shopping the comps. Now, you probably, before you put a deal under contract, you've kind of done it. Right. But your managers and you yourself are shopping the comps. Okay, what type of finishes do they have? What type of rents are they charging? So you kind of get an idea. Part of shopping the comps also is to introduce yourself to the people around you, because a lot of times property managers at various properties, you don't have to have the same owners, will pick up the phone and say, okay, how much are you charging? Basically, hey, I'm the property manager from down the street. I'm in an ABC building. I just kind of wanted to know, like, how much are you charging? Those property managers keep in touch with each other as well, right? To see, okay, how much they're charging, what can we do, what type of fees can we add?
So let me ask you this, a property management question here. Yeah. So how do you pick a right property management team for yourself? Because I think that's a key factor as well when you're doing your due diligence, because they might play a role in the whole operational due diligence as well, because you can bring them on board and then you can have them walk through the property with you. So if you can shed some light on that.
Look, so for instance, I can tell you this. Number one, there is no exact science here. It's like art, science, whatever. In my particular experience, I worked with big regional and nationwide firms. I worked with like regional firms as well. So for me, we have a really good property management contact now, and we just use that firm. What I found out was that the very big firms, as an example, by the nature of their size, are very bureaucratic, right? And I'm a very hands-on manager. So I like to be involved. I'm involved in every single aspect, right? Like I tell my investors, look, I can't guarantee you an outcome because I'm not a magician, but I can guarantee you a set of processes and a certain work ethic, right? So because I'm intimately involved, a lot of the big companies, they don't want to deal with managers that are like very hands-on. Go do this. This is accounting. This is operations, right? So they didn't really work out for me because they're very bureaucratic. They're very slow. Their cost structure is very high. For me, what worked out is working with a regional firm that is about 15 to 20,000 units, give or take, because then I know everybody in the firm. I know the accountants. I know the operational people. I know the owners. And I can then tackle my problems at a very quick pace. Because for me, I need to do things right now. Right? I'm not going to wait. I'm not a passive type person. But this is just my personal opinion, right? Everybody has their own thing. Some people, like I have a background in accounting. So when I'm talking to a controller, and a lot of times controllers tell me, or like CFO tells me some accounting terminology because they want to use big words to confuse you a lot of times, right? Anytime somebody uses a big word, they're trying to confuse you, right? And they tell me this thing the first time around, I kind of listen to them. And then I tell them this is bullshit because I know accounting and what you're saying is complete bullshit. It is a personal preference. So don't confuse a personal preference with the law. Right? So when people hear that, a lot of times they don't like it. But the fact of the matter is, look, I'm the client. So this is my asset. So I will manage it in the most appropriate way, not for you who's just trying to make your life easy. So it's always a push and pull, but you just have to kind of figure out where you lie on that scale, basically.
So you said you are very hands-on and you like to do things yourself. So let me ask you this question. What would you recommend for somebody doing your own due diligence or getting some vendor on board and rely on the vendor? Or what is the difference, I mean, what is the best way to do it?
No, Vinky, there is no best way, because I'll tell you what, if you don't, as an example, have a team, you have to rely on everybody, because how would you do it? Right? If you have a team, you still have to rely on outside specialists. I'll give you an example. If we have to go scope the plumbing lines, right? I mean, Vinky, I'm not going to go do it by myself. Okay, I'm just going to
need somebody.
Right? I need somebody. But when I get that data, I need to have the ability to interpret that data. Right? Because sometimes your vendors will say, oh, you need to do all of these things. And you're like, no, I don't need to do all of these things because I'm not trying to build the Taj Mahal here. Right? There's a combination, right, between over improvement and under improvement, and you don't want to put too much money because it's a business at the end of the day.
That's true.
So you need to have the ability to interpret it. The only way you can interpret it is when you have a good team filled with specialists, and you've just done it. Basically, there's no substitute to just doing it over and over again.
You said a very good thing over here. Would kind of resonate with me, like finding the right people or building a team. Even like it's building a team for the due diligence, like property managers, vendors, or even the asset management team later on, because that ties up to the asset management anyways. So is there some specific formula that you use to build that particular team? or any kind of due diligence that you're doing for these vendors or the property managers?
Yeah, look, for instance, there's due diligence on our corporate side as well as vendor side.
Exactly.
As an example, I'll give you an example on corporate, then I'll go to vendors. On the corporate side, as an example, look, it's always surprising to me that I talk to syndicators. They're managing people's money. They don't have a controller on staff. They don't have operations people on staff. They don't have marketing people on staff because their thought is that they're saving money. Well, the problem is if you, as an investor, give somebody your hard-earned money, I don't care how intelligent that person is, there's just so many things going on, right? So you need specialized controllers and accountants who are in this field, right? It's not like you can't do the work, but how much work can you do, right? Mm-hmm. So if you don't have good training internally, so when you bring on the right people, you don't train them, you give them unclear instructions, it's just not going to work. And if you have constant turnover at your corporate level, it's going to be a problem, right? So you have to really be careful when you're bringing on people and hiring people, but you have to hire people. So this is why I'm always surprised when I talk to syndicators, they don't have accountants at a very basic level on their payroll. I was like, look, it's not really going to work. I understand you're banking all the fees. It doesn't really work. You're not doing a service to your investors. Now, when you have vendors, right? And this is an art and a science, Mickey, because this is where you have to have some level of street smarts and common sense, because a lot of times people will tell you what you want to hear, right? Mm-hmm. So
that's true. Mm-hmm.
Look, so there is no science here, right? Because a lot of times you have to push back and actively, and not just you push back, you need to have a team that is like that, right? That they understand, okay, this is now when somebody is just telling me what I want to hear versus what I need to hear. So there is an element of being street smart. And then there's an element of, hey, you just do so many projects. So you very quickly figure out, okay, XYZ thing should cost me this much. Mm-hmm. This thing should cost me within this range. It should cost me between, say, 100 to 150 grand. So you just get that little thumb in the air thing, right? Then you look at the previous projects you've done and you're benchmarking everything. But again, if you don't have specialists and you don't work with the same people, you don't train them, it's just going to be very hard, basically. Mm-hmm. There's just no other way to describe it.
Mm-hmm. Wow, that's good. So, overall, looking at the due diligence, the way I understand is you're kind of mitigating a variety of risks, whether it's financial, operational, or even compliance.
And you never mitigate 100% of risk.
Exactly.
The point is you never mitigate 100% of the risk. All you want to do is
reducing it.
Avoidable mistakes you want to avoid. You don't want to run into stupid.
Exactly. So basically, even the compliance, you were talking about your corporation, and that's the thing. But, I have seen that a lot of syndicators, they do have a checklist or a questionnaire for the due diligence. And because that way they can use that to assess risk.
So
and
like I told you about
plan,
smart sheets, right?
Like you were talking about the Excel spreadsheet earlier, but you said it's a kind of a cherry on the hat. It's not necessarily 100% the spreadsheet. But do you have something like that too? Your due diligence checklist?
Yeah, this whole smart sheet, the smart sheets thing that I'm telling you about, this is all a bunch of checklists. We run a lot of, pretty much all our projects on Asana, we have checklists, right? Mm-hmm. And even forget about due diligence on the property level, right? When we're running deals, we're raising money, we have a checklist. Here is when the legal documents are due. Here's the process for verifying yourself if you're an accredited investor. Here's like a 3-step process. This is when this video has to be out. This is when then piece of content has to be out. All of these are checklists. And these are ever evolving, ever improving checklists. Because if you don't have them, it's not going to work. But the flip side to this also is that you can have all the checklists in the world, but if you don't have the right people or if you have the wrong people who keep taking shortcuts on your checklists, and the checklist is no substitute for having people who want to go do their job without taking shortcuts, right? So we have all these checklists, but the bigger thing is we hopefully have the right people, and we're always improving on that process to keep bringing on the right people who will not take shortcuts when they're doing their job.
Mm-hmm. That's a good one. So, and then the due diligence, like you said earlier, it translates into your asset management, because whatever the gaps you found, you want to try to mitigate that or to reduce the risk, right? We cannot eliminate the risk. So what does the asset management look like once the property is acquired, and then you have your due diligence report too? And that becomes part of your business plan. Is that correct?
Yes. Because look, you have your due diligence report that leads at a very simple level to your CapEx plan, a CapEx and OpEx plan, right? Because the amount of CapEx you have, that kind of determines where you're going. So that's due diligence because you're doing the financial audit. Think about it this way, right? Forget about the capital expenditure for time being, right? You're doing the financial due diligence, right? You look at the rent roll, you figure out, okay, this is the amount of money people are paying. This is a bad debt. This is the vacancy, right? So at its core, you see, okay, where is the asset performing right now? Most, if not all of that information feeds into your OpEx budget, which is your P&L. Your other stuff around, the physical due diligence, walking the units, scoping the lines, blah, 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 that leads to your capital budget, right? The CapEx budget. So these things form the basis of your business plan in reality, right? Now, when you have the business plan, for us at least, what happens is we have one intense weekly meeting per asset, per manager. We never combine them. It's every meeting is segregated, right? And with my team. Plus, on top of that, I have 2 weekly asset management meetings across all of our properties with my team Mondays and Wednesdays. 1 property meeting per property every week. Plus, my managers internally on my corporate level, not just on the property level, they are touching base with my on-site property managers on Monday, Wednesday, and Friday. And this is like a quick 5-minute, chat about, hey, here's what we said is going to happen in the first 30 days. Here's what we said is going to happen in the first quarter. Here's what's going to happen in the second quarter. Where are we with that? What's going on? What's going on? You're just touching base, right? And every time you touch base, you go to Asana, you check it off, you're done, right? So, but again, the whole of this entire purpose is people think you have a checklist or you have a process and suddenly it's great. If you don't have the right people, none of this stuff matters at the top. None of the softwares matter. None of your analytics matter because people will take shortcuts. So screening and bringing on the right people on your team, that is far more important than pretty much any other thing you're ever going to do.
So what are some of the processes that you're using to bring the right people on board to create a robust team?
Okay, so that's good. So number one, what we're doing is we frequently post various job postings, right? Just to screen candidates, number one. I let my controller and my operations, again, these are for back office type roles, like operations roles, right? I let my controller and operations guy, first of all, interview them. We have a clear set of deliverables. It's not like hey, you'll kind of do this one day and you'll kind of know. It's a very specific job for a very specific thing starting out. So you're going to do these 5 activities. And again, look, you do these 5 activities, you're really great, we love you, we'll then figure it out. But starting out, you have this core of things you have to do. So there is a technical competence interview, right? But the personality fit is very important. So then we screen them using culture index, which is, I guess you can find strength finders and all of these things. Yes. They're all in the same realm, right? We use culture index. And because we have certain personalities, so we have to see, does that person jive into our personality and our work culture? Mm-hmm. Right? So that is a very big compliment. Now, after that, I basically, as a last round, interview the person. Then we give them some sort of a technical exercise. So let's assume if they're coming in on operations, right? We give them certain analysis exercise and we have them record themselves and they do the exercise. And then we see, okay, well, what's going on? Because sometimes the answers can be wrong, but the thought process was correct. So you can always figure out, look, if somebody's thought process is correct, the answer will figure itself out. We're not rocket scientists here, right? But if somebody's thought process here isn't even there, right? They're not looking at things analytically, then it doesn't matter what the answer is. So there's like 3-4 steps over here. And again, this is a process we're trying to refine. So that's why we put these stages in between. But even then, it's not a guarantee that we'll 100% nail the right person. So this is why finding the right people for us, it's really a hard process for us to find the right people.
And it's ongoing. I could be pain in the neck. Seriously, I can understand that. It's very hard. And then after that, even if you find the right person, it's very hard to retain that person too.
I'm going to be honest with you. I don't think it depends because a lot of times, and I'm only talking about syndicators because this is the world I live in. A lot of times people want to pay, look, when you pay peanuts, you get monkeys, right? Mm-hmm. So a lot of times people want to pay somebody $50,000 for a job that they can do that is in the market for $85,000, and then they complain that people don't stick around.
That's
right. Look, the other person also has to put food on the table. And not just money wise, because a lot of people, everybody wants to cheapen out. Look, I don't want to pay more money because every dollar I pay somebody else is a dollar I don't have. But that's just kind of the way it is. People don't pay good salaries. They expect to get $200,000 of work from somebody they pay $50,000. right? They don't hire professionals. They'll go to Upwork. And I mean, I hire off Upwork, right? But what's funny is people are outsourcing underwriting, right? I mean, you outsource all the components, you pay like crap, you hire the wrong people, and then you complain nobody sticks around. So I'm going to be honest with you, people stick around. Again, it's not 100%, right? People have left us also, and we fired people. A lot of people want to stay, but they want to get paid money commensurate to what they're doing.
Mm-hmm.
And people don't want to pay a salary, and they want to bitch about the fact that people leave and nobody has a work ethic anymore, blah, blah, blah. People have a work ethic. You're cheap, basically.
That's true. And the other factor is that, how good relationship you have with the employees too. You like how you're treating them. That's very important, because most of the times your employees, the teammates, they leave you because of your behavior. Maybe money is not even the issue, maybe, because if they're not treated equally, they're going to leave you. If not today, tomorrow. But they know their value, how much they are worth. And if you cannot see their worth, they're not going to be with you. So now
Sorry, just one more thing I wanted to add on that. What I also do basically, and again, it's not like nothing unique here, right? I learn from other people, and you read and you learn. Mm-hmm. You also have to show a path of progression, right? So if you bring in somebody and they stay at the same level, and if they're happy, you don't want that person around you because they're happy. I mean, they did nothing and they're happy. You want people who are going to push you also. So again, it sucks to have people who want to take more money because you don't want to pay more money, obviously. But if they're producing, then you can't really complain.
That's true, because they're helping you challenge your status quo as well. We have to understand that. It's not like that they're asking for more money because they know their worth, number one. Number two is if you see that they're helping you challenge your status quo because you have to work harder.
Yeah.
To maybe do a bigger and better deals in order to accommodate that person having in your team, And then I'm going to ask you this question now. So let's think you have the right team, you have all the right players in. So what are some of the growth metrics that you use to keep the momentum going? That's very important as well.
Okay, so basically the growth metrics we've used essentially are that, again, I have like one-on-one meetings with my key players, pretty much. Like we have a Monday meeting where the entire team. Then we have key meetings with my key players, operations, accounting, acquisitions, right? So because I'm having that, I have semi-annual performance reviews, and we have a very clear structure, right? Going in, this is why your job description is important. What you start telling them, hey, this is what you're going to do, and this is what you're going to get paid, right? That's very important. So when you set expectations correct, and again, I'm also learning this, right? Because I've realized I thought I was a good communicator, but it turns out sometimes I also leave things that are, it's not completely 100% understood. Like what I thought in my head versus what the other person is doing are two different things. So with this, look, if they're top people, number one, you got to pay them. Okay. I know lots of employers like to say, well, it's more than the money. You got to pay people. If somebody's performing, they're hitting their targets. For us, targets operationally are, where's their occupancy? Where's their delinquency? Are we under budget, over budget on CapEx? We're over budget on all our OpEx, right? Boom, go for it, right? It's frequent. Every 3 to 6 months, you add a little bit bonus on top. Then for certain people who are key players in our team, every time I do a deal, I give them a share of the deal as well. Even if they leave, that's fine. I mean, they help me close the deal, whatever. It's not the end of the world.
That's true. So looking at the current situation where we are economically, so anything change in your processes from the due diligence perspective or from finding the right people in your team? I mean, taking the whole deal from conception to completion, how did that impact you? Or do you see any changes in the future?
No, nothing has changed. I'm being honest with you, nothing has changed because look, due diligence is not going to change. Hiring the right people, hopefully, that have a good fit with your culture and stay and all of that stuff. Because a lot of times people leave because look, it's very hard if somebody gets an offer for 2x the money to tell them to stay. I mean, I wouldn't do it myself, right? So why would I expect this from somebody else? So high level wise, on a corporate level, finding the deals, doing the due diligence, hopefully hiring the right people long term, nothing's changed. It's all the same. These things do not change because they're fundamental. It's not like suddenly when it's bad times, your hiring policy can just change. Right? I mean, it doesn't work like that, basically, for us at least.
Mm-hmm. Okay, that's good to know. So what should I ask you that I didn't ask you enough about due diligence?
Well, what you should ask me is how you're going to pay me a lot of money for my next deal. How you're going to invest a lot of money in my next deal, Vicky. You should ask me that.
Okay. You give me the answer to that.
No, the answer to that is you're just going to raise a lot of money and you're just going to give it all to me and we're going to call it even. Right? That's a simple answer. Look, I think we've covered the bulk of it, right? Obviously, we could have a second show, if you like, on asset management, going down to the specifics. We can show you kind of what we look at high level. How do we view things? But again, the point here is, guys, whether times are good or bad, the fundamentals don't change because how you analyze something, how you treat people, how you take care of them, how do you form a business plan, how do you stay in touch with people, that's not going to change. Even during boom times, it's not like our Monday meeting wasn't happening. And it's not like during bad times, our Monday meeting isn't going to happen. Right? So as long as you focus on the variables you can control, 9 times out of 10, you'll be fine. But again, this doesn't mean you'll always be successful, right? It doesn't mean I'll always be successful. There's going to be deals that are probably don't work out the way we want them to work out. But we can't let the 1% of thing that goes awry kind of change your entire algorithm on the other 99%, basically.
Yeah, I agree on that 100%. So share one golden nugget with my audience.
My golden nugget with your audience is to be diversified. Do not put all your eggs in one basket. Even though I'm in real estate, I can tell you this, I always chuckle and laugh when people say, I only put all my money in real estate. I'm like, okay, that is asking to get your butt kicked. Be diversified, have some liquidity on hand, and always spend below your means, right? If you live below your means, you're going to be very happy, mostly.
That's true.
Right.
So this brings us to a rapid fire round. I'm going to ask you 5 questions. You're going to answer in 1 word or 1 sentence
I
only.
hope I'm ready.
Right?
I hope so.
That's good. So what is one of the important things that you have learned in life? And how did your life change after learning it?
I don't think I'm that old to answer that question yet. I think I need more gyan and I need more wisdom before I'm able to answer that question. I'm learning. Let's put it this way. I'm waiting for that epiphany, basically.
I think it already happened, right? Look at you where you are in your life.
I can always go more. I mean, look, maybe, you ask me, look, let's put it this way. I have 2 young kids now. So they're 2 and 5. So maybe you ask me this question in 5 years and I might be better equipped to answer this question. Right now, I still feel I'm trying to get my epiphany.
Okay, let's move on to the next one.
Yeah.
What is one of the best books that you have read or recommend?
Oh, there's lots of books. I mean, as you can see, these are just books I buy every year, and every year I give away my books, and then I buy more books, right? So one of the best books a long time ago was like Black Swan by Nassim Taleb, right? It just tells you there's very weird things that can happen. So, kind of always be faithful, basically.
That's true. In 1 word, what does life mean to you?
Oh, that's 1 word. Wow. Happiness? Yeah, for me, it's very lucky. I'm very lucky, I feel. Like I have loving parents. Yeah, I have loving parents. I mean, I don't always feel that grateful, but, I'm loving parents. I have a good family. My wife is really amazing, right? I have 2 beautiful kids. They're healthy, right? What more can you ask for, right? We make a decent living. It could be a lot worse, right? I'm very happy with my life.
That's good. That's good. I'm happy for you. What is your biggest passion?
Oh, I have to find that out. My biggest passion traditionally has just been reading books, right? Reading books, listen to music really loudly. Like my mother used to tell me, when you move to your own house, she said it in Punjabi, when you move to your own house, then you can blast music at whatever volume you like. So now when she's in my house, I blast music really loudly. And when she says something, I said, look, you told me this like 25 years ago. And when I buy a house, I can play my music really loudly. So that's what I'm doing.
So what music do you like?
I listen to everything. I'm a big blues fan. I listen to a lot of rock and roll. I listen to a lot of Punjabi music. Like this guy yesterday, my kids, I mean, they don't really speak Punjabi that well, which is sad, but hopefully they learn. So yesterday, yesterday, right? So we were on our way back from San Antonio because we were visiting family. I don't know if you know this guy, AP Dillon, but he's a younger guy, right? So I'm not
that old either. What do you mean?
No, but he's like literally like a year old, right? Or a year or 2 old, right? My sister made me listen to him. So he has a song called Brown Monday, basically.
Yeah, I have
right?
seen.
Have you heard that song, right? So now my kids, for instance, my younger son, he's like, Baba, put Brown Monday. But he says it in a very like whitewashed way. Right? It's not Monday, it's Monday, right? So, it's kind of cute. It's fun.
That's good. So if you can turn back in time and talk to your younger self, what would you tell yourself?
Oh, nothing.
Why?
I can tell you this right now. Like I'll give you an example. My wife's a physician, right? So, and her friends, when I talk to them, they've had to be always on since they were like, I don't know, 12 or 11, right? Because you have to have really good grades in high school. And I had decent grades, but not like as good as her, to just get to medical school. Then you have to crush it in medical school. Like my wife's MCAT, she was like 99.8th percentile, right? I was like, are you freaking kidding me, right? And I, for instance, had decent, I had pretty good grades. I went to great school. But throughout my life, I did things that, I could check out for a summer, go travel or go watch music festivals and this and that. And I would never change that for a million years, because at that time, a lot of my friends were getting into investment banking and private equity and their jobs. And they'd be like, well, why are you taking the summer off? And I would tell them, dude, I'm only going to be 24 once in my life, hopefully. So, I got some time on my hands, right? And now I don't regret it at all, because now I see some of my friends and they're doing really well, right? But they always have that, yeah, we should have kind of done that thing. And I always think to myself, maybe I should have done more of that. Maybe I should have gone to more concerts and more people and more food. And so I wouldn't tell myself to change anything. The only thing I'd probably change is do more of whatever I did.
Yeah, so I think you were living in the moment. So that's what living in the moment is. Everybody talks about living in the moment. You did that and you're still doing that. Awesome.
Oh, I love it. I would never change anything for a million years, basically.
That's good. So how can people reach out to you?
Oh, okay. Well, they can go to our website. It's pretty simple. So give me one sec. So if you go to our website, you can join my mailing list by visiting our website, boardwalkwealth.com. That's BOARD walkwealth.com. The form is right on the homepage. And if you join now, by the way, I'll give you access to my hidden mobile app, which has over 9 hours. Yes, 9 hours of free passive investing courses. I'm not a coach guru, so it's all free, right? That's at boardwalkwealth.com.
All right, perfect. Thanks for coming to my show, Omar. I really enjoyed it.
Oh, thank you, Vinky. I really appreciate it. Thank you for inviting me.